All right. So, how many of you guys were shitting your pants today when this massive volume spike hit the fucking markets? Let's go ahead and take a look at what happened here and try to get some insight over where the market's going to be moving. So, first thing we want to do is we want to see, where did this bull run begin? So this was the bull pennant we broke out of, right? So this began our bull run up to 207. But then we started seeing right around the peak of 207.5, it started to really die down in volume in here. Okay, this is where our volume's lining up. It really died down in volume right in here, and we saw a little bit of a turnaround. And then we saw, oh shit, it plunged with a lot of volume. That was a lot of positions getting liquidated. That was a lot of people panic selling, people taking profit. It was a combination of things. So we dropped a good bit, especially on the Bitcoin market. So now that we have this piece of information, we know where we started from our trend. We know where it went. At the beginning of our bull run, we started right here and we broke out. We broke out of our pennant. Okay, let's go at a lower time scale here. So just for people who aren't familiar with Fibonacci retracements, they basically just show you for any length of market movement, it shows you a percentage of that length. So for example, we started here at 165 and then we moved up to 207.5, and then in between there are different percentages within that move, right? So 23% of that move is going to be 197, 38% is going to be 191, etc. So what we start to see here is that this found a lot of correlation with the 50% mark, right? During our retracement, we saw it plunge down and actually did a full retracement, and the market didn't like it and it got rejected here, okay? And it got rejected and immediately shot back up to 50%. 50% retracement's pretty common. What we saw was a really strong move in the market, a full retracement and then a retracement within that retracement. So one thing that's going to help us to know where it's going in the future, we've already established our bottom here, clearly, right? We made a new low and we started making a high, and we didn't make a new low again. So this tells us we found our bottom here. It was a failure to make a new low. We found a new bottom. Okay. All right. So now we got to draw our fib retracement the opposite direction. Okay. We drew the first one starting here and moved up to here. And now we need to see the same sort of thing, but in the opposite direction. Okay. We need to see where it's going to retrace back up. Before we were saying where it's going to retrace down. Now we're going to see where it's going to retrace back up. So we start here and we move down here to our bottom. And so a 100% retracement, this little guy right here, is going to bring us back to our original point, and a 0% retracement is going to leave us at our bottom. So what's the first thing we see? We see this thing retraced 50%, right? And not only did it retrace 50%, it rebounded off the 50% retracement. It didn't rebound very convincingly, and it's now starting to find support at our 50% retracement. And 50% is a really common support level, both in bullish and bearish trends. So now we can start making predictions over where this thing's going to move next. Okay, so in order to do that, we need to go and identify our previous support levels. Okay, here's a support level. You can see the market didn't like this value. It rejected it. It rejected it multiple times. 1, 2, 3, 4 times. Okay, well, this also seems to coincide with this support here during the way down, right? It went down here, it rebounded, and it finally broke through, and it came back up, it hit it, it rebounded off, and now we're starting to find support on this. So I'm going to put a Fibonacci retracement on top of a Fibonacci retracement, just so we can get some insight on the market here. And these are going to be where our support and resistance levels are going to lie, and this is going to tell us where we can expect the market to move in the future. So what do we see here? We see the market moving up, moving down, moving up, moving down. It goes back down and it does a 50% retracement. It bounces off, hits the 23% retracement, and then it goes up, and now it's finding support here. Okay. So now we see that the next level of resistance is going to be our 50% retracement of our upward trend. Okay, we see that here. This 50% retracement is now the resistance for the rebounding market here. So what conclusions can we draw from this? Okay, well, if we look down at our indicators here, we see that we had a really strong downward momentum. The MACD tells us it had a lot of downward momentum, and it actually pushed our RSI, which is our relative strength index. It pushed it into an oversold region, and the market rebounded and it bounced back up. And now we're cruising along at this 47.47 value here. For people who aren't used to or familiar with RSI, it stands for relative strength index. It's an indicator, and that's going to tell us, one, the momentum of the market, and it's going to tell us, based on prior data within the market, is it likely to reverse. We can get reversal signals on the RSI and on the MACD. MACD is this. Okay, it's called the MACDs. It's a little acronym. It stands for Moving Average Convergence Divergence. Okay, and both of these guys are going to tell us if we're likely to reverse. And wouldn't you know it, we've got a consolidated RSI. We've got a MACD that's about to flip. Okay, it's currently bearish, but it's about to flip to bullish. And when it flips to bullish, that's when we're going to start looking to see some upward momentum and a test of these support lines that we see here. I'm sorry, test of the resistance lines and test of the support lines we see here. Okay, now let's clear this out here. So where are we going in the future? Personally, when I graph, I don't typically like to use Kraken as much because I know I post a lot of graphs with Kraken, but I don't like to get trend data off of Kraken because it's got low liquidity, and I don't feel like it's an accurate representation of the overall market and where it's likely to move. I trade on Kraken personally, but when I'm developing trends, I'm going to go over to Coinbase. Coinbase has much higher volume, like significantly higher volume, and it's not leverage trading, so it's all it's basically just I mean, there is leverage trading, but you gotta be super I think it's like a $10 million limit. Like you have to have $10 million in your trading funds to be able to legally margin trade on Coinbase, or on GDAX rather. So we're gonna move over here to Coinbase to get a read on what's going on here. So let's draw our Fibonacci retracements here. So this is what we're looking at here with GDAX, which I consider to be the market leader in terms of trend. Right now it has a $10 lead. There's a $10 premium on GDAX, right? Mostly because of the volume. It has higher liquidity, various other reasons. But this is where we're at right now, right? So we hit our top, we retraced, did a full retracement, overshot to about, looks to be the 115%, and then the market didn't seem to like that. And right now it's finding some nice support right on the 50%. So now we need to start looking at our resistance and support levels. Here's a big one. Okay, this is going to be a big milestone for this movement. Okay, you can see that the market tried to test it one time, it failed, it got rejected. Okay, it's finding support. Let's mark this because this is our 50% retracement line. I'm leaving the Fibonacci retracement off there, so it just cleans it up a little bit. So this is going to be a point of interest. This is going to be a point of interest. Okay, we can see this is a point of interest because this was the lower bound of our consolidation pattern here. And if you recall last night during the stream, I wasn't convinced that this was an actual breakout. It didn't look like the volume was there for the breakout. It wasn't showing signs of a breakout on the indicators, like the MACD on your RSI. It wasn't showing very convincing an indication of a full breakout. So a couple of guys were in the stream. I recommended either closing your positions or holding off to enter your positions. And one point of interest was this right here, because you can see as you come down here to your volume, you can see this kind of stands out a bit for these price values from here to here. You can see that there's some interest in the market here. Every time it tests it, there's rejection, and there's a high sell volume, but it's immediately picked up. So you can see here, just based on volume alone, that the market isn't very comfortable going below these levels. Just on volume alone, you can see that. Okay. Not only that, but when we go to our higher time scales, we can see here, this was the beginning of our bull run, was right here. Oops. beginning of our bull run was right here. And you can see here, this is when, right around the time that they started getting momentum on the MACD here, moving average convergence divergence. Okay. The highest time scale I really like to use when I'm trading is the 6 hour. I think anything higher than that, there's a lot of missed trades in there, because I mean, look at the volatility in here. Like, this is massive. And if you're on a high time scale like 12 hour, for example, you would totally miss everything that's going on there, right? And if you're on leverage, like, that could make or break your leverage position. So when I'm looking at overall direction of the market, I really only like to go to 6 hours. And when we saw the breakout here, I wasn't convinced, because you can see here that there's divergence on 2 different indicators. Divergence here, and there's divergence here. Come on, you can do it. There you go. Okay, so what do I mean by divergence? Very simply, if this is an upward moving market and it looks like it's going to continue moving upward, every new price high is going to correlate with a high on the MACD and on the RSI. That's just characteristics of upward momentum that is healthy and is not likely to retrace or get corrected. Okay, but what we see here is once it makes a high here. Come on. Okay, it makes a high here. Okay, and then it makes our third high here. Okay, 1, 2, 3. And on the third, it fails to make a new high on the MACD. And this is a good indication that we're losing upward momentum and it's time to close your position. If you've got a long, or maybe look to open a short if that's what you're looking to do. Opening a short would have been a good play up here as well, right? Not only that, but when it made a new high, look, the volume's dying down. All of these things are diverging. This tells us we're in for a trend reversal here. It tells us that the market is not looking, it tells us less people are interested at these higher prices and that more people are interested in lower prices. And so when you think about the market, it's basically a balancing act, right? It's a balancing act between bearish and bullish market players. And when it becomes balanced on one side, it's going to tip. And if there's more bears than bulls, it's going to be a bearish market. And if there's more bulls than bears, it's going to be a bull market. And what we can see here is that this is where the bulls are starting to lose out. Even though the price is going up, the bull volume is not pushing the market up. And we're likely to see a reversal here. Okay, so let's go into, now that we understand why this flipped, let's get rid of some of these lines here, clean this up. Let's look at where we're likely to go in the future. So first thing, we're going to look at this for the first time together. Let's look and see what the Fibonacci retracement of this overall bull run looks like. Okay, we start here and we go up to 217. Okay. Oop. So what do we see? We see support at 23. We see support at 38. Not a lot of support at 50. We kind of just breezed right past that. So let's move this down then. We'll call this the top, and we'll call this an extension. Okay. What do we see here then? We see a lot of support at 61%. That's good. And a lot of support at 23%. We see a retracement to 50. Let's get a little more detail here. We see a retracement to 50. Let's move this in. Boom. Okay, so we found a lot of support at 61. We moved up to our top. We had a little bit of bearish activity here that made us consolidate. And this looks to me like an extension. This doesn't look to me like the top of the bull run. This is an extension of our bull run from here to here. Okay, let's do some math real quick. A typical extension, a healthy extension, is going to be 127% extension of the bull run. So let's figure it out together. Total bull run is going to be 184 minus 86. You get 98. Okay, so 98, 1.27 times 98 equals 124. What is 124.5 plus 86.5, 211. Boom, right there. This is not the top of the bull run. This is an extension of this bull run, and we're now consolidating. So my guess for the upcoming days is this is going to be our main support line, this 184 figure. This is going to be the point of interest to keep an eye on. We're going to see some volatility in here. Yeah, you want me to walk through math? Sorry. Yeah, let me do that. Yeah, let me pull up, let's pull up Paint, because I'm a professional. All right. Let's put this in there. Just get rid of this shit here. This is how the charts are made, ladies and gentlemen. You're witnessing it live in Paint, Microsoft Paint. I know I can use TradingView, but I like to do it by hand. All right, so there are two ways to look at this bull run. Okay, one way is to say this is the top of the bull run, or you can say this is the top of the bull run and this is an extension of the bull run. Okay, a typical extension, a Fibonacci. So there are Fibonacci retracements and there are Fibonacci extensions. A Fibonacci extension is typical in a strong bull run, which, like we saw, we doubled our price essentially within a couple of days, and so we had a lot of extra upward momentum that shot us into a Fibonacci extension of that bull run. Okay, and this is how the math is going to work out. Typical Fib extension equals 127%. Yeah, this is Coinbase data. Okay, typical Fib extension is 120%, 127%. If we view beginning of bull run equals $86, end of bull run equals $184, length of bull run equals 184 minus 86, which equals $98. So this is like saying we had a bull run of $98. Okay, this whole price gain was $98 from bottom to top. If we do a Fibonacci extension of the bull run itself, Fib extension of bull run equals 98 times 1.27, 127%. That equals times 1.27. We get the Fibonacci extension should be expected to be $124.5. $124.5. Okay, so now if we want to see where this extension goes, Fib extension from the beginning of bull run, this is going to equal $86 plus 124.5, which equals plus $86. Wait, I think I just fucked something up. No, that's right. Okay. Which equals $210.50. Okay, so a healthy extension, and keep in mind, you know, these aren't exact values. Like, don't expect it to be, you know, once it hits this, it's going to do that, or if it hits this, then it indicates this. these are zones. These are Fibonacci zones, right? So right now, we're in the middle of seeing this Fibonacci extension, okay? In fact, we overextended ourselves. We overstayed our welcome here, and that's why we pulled back so hard, okay? Let's go ahead and cover this right quick, okay? And specifically underline this. I need to get like a Wacom tablet or something. This would be a lot easier, okay? And what do we see here? We see Fibonacci extension right here, from here to here. Fibonacci extension from here to here. Boom. We hit the 100%, the 100%, right? And then we overextended from the bull run by 127%. Roughly 127%. You say 127% extension, even if it's really more than 127%, just because that's like, that's just the nomenclature you use to describe the Fibonacci level here. We draw an arrow. Okay. So now the market was unhappy. We overstayed our welcome, and we had to do a retracement. Every great move comes with a cost, and our cost was we had to retrace. But luckily for us, we found nice support right at our complete end of our bull run here. So we've got a nice support level here. Support. I like to use brown because brown is like the earth, and the earth is supportive. Okay, let me see. Questions with that so far? I know it's kind of abstract and it can be a little weird, but I really feel like if it's explained properly, you don't know. Wait, what is this question? You don't until after the fact. That's why it's called technical analysis. I'm not sure what the hell that means. Where are fib percentages derived from? So they're derived from pi. They're all fractions of pi, and the golden ratio. You could find Wikipedia. Let's look it up together so I don't just spout bullshit to you guys. Wikipedia golden ratio. Golden ratio. So if you look here, a 61% retracement is it's derived from the golden ratio here / God. You can thank God for all these things. Yeah, and the golden ratio is just different fractal patterns that you can find in nature. You can find it within circles. You can find it within cubes. You can find it within different spirals. There's just different ways to derive this gold. It's called the golden ratio because there's a reason why. Oh, because they called it the divine proportion because it was so commonly found in nature that they thought God was in charge. Let's see here. Another question. I love how the golden ratio permeates everything. Yeah, surprisingly, that's one of the most reliable indicators, or not indicators, but mathematical models we can use, and it's really consistent. It's surprisingly consistent. Yeah, I'm not really sure why it's surprisingly consistent, but that's how I've entered and exited a lot of my trades. Another question here. Okay. Does everyone understand why it was safe to assume this was the top and not... I'm sorry, does everyone understand why it's safe to assume this is the top? Get out of here. Top. This is the top. This is an extension. Does everyone understand that? Could you explain how do you set your entry and exit points based on the golden ratio? So, no, you would not... Okay, so the question is it because of the huge pullback we saw at the top of the extension? No, it is not because of the pullback. The pullback could have been predicted if you were looking at this as the top rather than this as the top. And we can look at this as the top because if we go over to our higher time scales here, we see that the market started losing momentum here. It started losing momentum here, okay? If we look down here, we see here on the MACD and the RSI, it's diverging. So we know it's time to exit our positions. Does that make sense? Yeah, well, it's not that the MACD was coming down, because this is, a common pattern. It goes up, it goes down, tide goes in, tide goes out. You can't explain that. But it's not the movement of the MACD that matters. It's the relative peaks relative, it's the peaks of the MACD relative to the price. Okay, so we made a peak here. This corresponded with a peak here. We made a peak here. A new high corresponded with a new high. We made another new high in price, but we did not make another new high on the MACD. So this tells us we're diverging from our current trend and it's about to reverse. Or not necessarily reverse, but it's going to consolidate. Not reverse. Reverse would indicate that we're going into a long-term bull market, bear market. But it just consolidated. So if we were looking at the MACD last night, right, and all we were given was this amount of information, right? Last night in the stream, I wasn't convinced by this, and I didn't notice the Fibonacci extension from there, mostly because it was like 3 in the morning, and I was not really speaking coherently. But I did notice that it was diverging here, and it just happens to line up perfectly with a Fibonacci extension of 127%. Okay. Do I think the MACD divergence is due to exchange bottleneck? I'm not sure what you mean. What do you mean by exchange bottleneck? Surely with crypto is highly correlated with what other coins are doing. Can you assess only the ETH USD pair? No. All of these apply to all the other markets. I just specifically like to use Ether because I believe the tech, and I believe that other people believe in the tech, and it's less likely to have bullshit pump and dump type scenarios by large whales and have them affect the market as significantly. When people don't understand the tech, they're only trading for the value, and they don't. I don't know. I feel like it's not. You don't derive as much confidence in the markets because there's not as much confidence in the tech in which the market is based. Okay. He's saying it's difficult to currently purchase coins due to exchanges being down. No, I don't think the MACD divergence was due to the exchanges. I mean, it could be, but that's not the way. That's not the relevant point. The relevant point is that something, doesn't matter what it is causing people to lose confidence in the upward momentum, and it's going to likely pull back. That could be any number of things. That could be the fact that right here is right when Kraken shit the bed and liquidated a bunch of people, and so people started getting worn out by the by the growing trend. Maybe they started having the feeling that all no good things last forever, so you're like, oh, this is going to reverse sometime. That's a common thing. So there's a lot of things that will spook people out of the market, and you can use the indicators to show the market sentiment and place your positions accordingly. Yeah, so Coinbase was down through the whole dip to 160 earlier. I did notice that, and that's so fucked up. But that's probably because they were just getting by the skin of their teeth, and then a market dump caused everyone to get on there, and they just inherently DDoS themselves. That's that's what I think happened. How much do the announcements in the Ethereum tech and increased public coverage affect? I'm huge on fundamentals. Absolutely. I think that fundamentals trump technical analysis more often than not, and they're very reliable. But it's sure is nice to have a hunch on something and have it confirmed with statistical patterns that are statistically proven to have a high likelihood of success. So if you're looking to get an entry point based on a fundamental hunch, fundamentals won't tell you where the price is going. It just tells you, oh, it's going to go up. Well, how much is it going to go up? When is it going to go up? What's a good entry point to enter the market? What's a good exit point for the market? Fundamentals won't tell you that. You guys know TA is just a meme, right? I'm not sure what you mean by that, but if you're trying to imply that it's not real, I don't know what to tell you, dude. Do you also believe the Earth is flat? Do you also believe that global warming isn't real? I don't know. I'm not sure what your argument is based off of. What I'm saying is that new money flowing in lifts all crypto, yes. So how do you factor this in? What will the overall market be doing? Well, there's definitely no way to know what markets are going to pull what users. You can assume that the bigger guys are going to get the most push because people know the names of them, like Bitcoin, for example. It's on a tear, and for no good reason, really. it's pushing up because news coverage is covering cryptocurrency, and every time that Ethereum gets coverage, Bitcoin rises because that's what people know. This is the household name that people know, and that's what they go to because that's all they can think of. Apparently Coinbase added 400K. Yeah, so Coinbase is getting a lot of popularity because they're one of the only user-friendly exchanges for people that are new to trading. They're one of the only gateways for the layman to enter the market. So they've kind of got that cornered. And so they're getting a ton of new users because the more it grows, the more popularity it gets. The more popularity it gets, the more news coverage it gets. And that's how people just, this sort of information is getting spread that way. How much do you watch buy/sell walls in real time? I don't pay attention to buy and sell walls because they're so manipulated. Like, since we've been talking, like, watch this thing. Okay, this is a huge sell wall. And as the price approaches it more often than not is going to go down. Like, these are just scare tactics to scare people who don't know how to properly analyze the market, and it's like the first round of defense for people who are trying to cover their positions. They don't mean anything. I really don't. I mean, don't get me wrong, order books matter, but when you're placing trades, don't trade on order books because they change at they don't give you insight into where the market's going. They only give you insight into the current state at that exact moment. Okay. At what price do you think ETH will peak? I honestly don't know where the peak is going to be because we're in a really strong bull run. But I'll show you this though. This is really nice. So we're in an ascending channel right now. Wait, is this log? Yeah, this is log scale. So this is an interesting little channel. So this is telling us in a logarithmic scale, the market has over the past 5 months, it has risen and fallen within this channel. Okay. So that may just look like a weird coincidence. But for those of you who don't know about this one, Bitcoin was also in one for years. Okay, up until we broke this, we were in an ascending channel for a little over a year. Wait, something's messed up with my scale here. So you see that? This is Bitcoin, dating back to, stop clicking, god damn it. Dating back to 2016. And every time there was an all-time high, it consolidated down at this channel, it rose up to a new all-time high, it consolidated down, until ultimately we broke out of that channel, like a month ago. And that's what we're seeing right now on the Ethereum market, on the Ether market, is that we're now in an ascending channel. boom, all-time high. Or not an all-time high, but high, boom, all-time high, consolidation, go up. So I think the next move that we're going to see is going to be within this channel, and it's going to be at the top of the channel. I think that's the next high that we're going to see. So something around 250, between 250 and 300. All right, let me look at some of these questions here. Sorry, I've been neglecting you. Let me see. What is my background? My background is in engineering. I've actually only been doing market analysis for the past couple months. I just get really obsessed with things, and I just got lucky, and it happened to be something that makes money. I get really obsessed with finding patterns. I get really obsessed with optimizing patterns, yeah, it directly applies to finance, so it just happened to work out in my favor. I understand your explanations, and I'm really grateful for your efforts. You're helping us a lot. These are life-changing times. I agree. These are life-changing times. That's part of the reason why I'm trying to offer this, is because I want to, whatever I can do to help you guys out, like, I think it will only better society as a whole if everyone does well. And right now we're at the point where we can all make a lot of money, and there's not this finite resource where it's like, I need to make money and I need to prevent you from making money. I think everyone can make money, and everyone can make you know, a better life for themselves, and everyone can stop working their bullshit desk jobs that make them miserable and fat and pale. That's not how human beings are supposed to be. And you know, I think we've been exploited for too long, and this is a way out. But that's just my that's my take on things. Okay, what was another question here? What happens when you break out of the channel? What phase or action happens next? So typically what happens is a channel is a consolidation pattern. A consolidation pattern just means that a consolidation pattern is a trending pattern that gives no indication of, I'm trying to figure out how to word this properly. It's a pattern that allows the market to move in a healthy manner without risk of massive bubbling at the top and massive losses at the bottom. So as we approach the bounds of the channel, it's really important to see what happens, because say for example we approach the bottom here and we took a dip out of there. Typically what happens when you break out of a descending channel is that means you're about to enter a bearish trend, and if you break out of the top, that means you're about to be in a bullish trend. So this is what happened with Bitcoin here. It broke out of the top of this channel and it just fucking took off. Okay, it was cruising along healthily, right? It hit the top, and then boom, it just took off. Same thing's happening for us right now. We're cruising along. Right now, the bottom of the channel is here. So another point of interest is going to be the values along this channel. These are going to be really big points of interest. And as you see the market, we're going to test it again. That's what's going to happen. Whether we go up here and test the top, or we go sideways and test it over here, this line will be tested again. And this is going to be a make or break point on the market, and you just got to keep a close eye on that. Did I give my 2-week notice? Did I give my 2-week notice so I can teach you guys full time? I was planning on giving my 2 weeks notice today, but the market dumped, and I didn't get to close the position at the value that I wanted. So I'm going to wait for a better exit so that I can have a little bit of cushion in my bank account to absorb the hard times, because I'm still kind of scared to do it full time, but that's where I'm at right now. Leaving my okay, let's see. I could be wrong, but personally I think the only problem with your at the standing channel is those bottoms you have connected with the lines aren't exactly bottoms compared to the massive falls. I mean the top and the middle points on the lines are both flat with no market change, not false. I'm not quite sure I understand what you're saying. JCap 14. So if you could rephrase that, I'll give my input on it. Can someone please explain to me the connection between Coinbase and GDAX? So Coinbase is the fancy front-end operating system for GDAX. Coinbase is GDAX. Coinbase operates through GDAX, and it charges the user a premium because it simplifies the whole market system for you. It places market orders. You don't have a say in your limit orders, like buying at a specific value. You say, I just want to buy at market value. And Coinbase charges a premium for that because a lot of people just don't know how or care to learn how to use an exchange. And for those people, they can just use Coinbase. That's basically it. So if we break out of the channel to the top, do we see crushing 300 pretty easily before we enter another consolidation? I don't quite understand what you're asking either. So if we break the top of the channel to the top, do we see crushing 300 pretty easily before? Oh, do you mean like a breakout, an upward breakout? Yeah, typically that's what happens. So whenever you have channels that are ascending or descending, those are just trending channels, and a breakout to the top is going to indicate strong upward movement, and a breakout to the bottom is going to indicate strong downward movement. That's what that's going to mean. So yeah, if we break this line in a convincing fashion with high volume, yeah, there's a really strong likelihood of a really strong push upward. But I mean, as it stands, we're seeing a lot of upward movement. Strong. I mean, we doubled the price of Ether in a week. I'm not sure you can really ask for much more than that. That's pretty good, man. In case we break downwards and the market goes into bear mode, where do you see the Ether bottom? So to predict the bottoms, you got to go back to your support levels. You're gonna have a support level here. You motherfucker, give me a line. So you have a support line here, right? This is significant. Support line here, this is significant. Support line here, this is significant. You're just gonna have to go back, and as you knock through all these support lines, that's gonna give you more insight into where the market's gonna be. I saw a question up. Let me see. In terms of fundamentals, what other altcoins do you like? So, you know, I'm not sure that I'm interested in other altcoins, to be honest with you, because I think Ether or Ethereum as a platform is the way of the future. I think that Ethereum is going to be the new standard protocol, just like, just like in the early days of the internet when we had different service providers. And now ultimately we just have internet, and we have, different websites on the internet. I think Ether is going to be the internet of the crypto space. It's going to be the internet, and things are going to be built on top of Ethereum. So I don't find much interest in the other coins. I know right now Ripple's really popular, but Ripple seems kind of like a scam to me. I don't trust Ripple. Ripple as a platform. So a lot of people don't know this, but Ripple there's Ripple the currency, and there's Ripple as a platform. Two separate things. In order to use Ripple the platform, you do not need the currency. You do not need it, and a lot of people think you do. They just fundamentally don't understand the tech. And so a lot of people, they're buying it because they think it's just like all the other cryptos, and it's not. You can use Ripple as a platform, and the cryptocurrency is completely independent of the platform. You can use Ether, you can use Bitcoin, you can use all these other things. There's literally no reason for any corporate adoption of Ripple, the currency, and it's just all hype bullshit, and it just comes across as a scam to me. I don't like it. Especially considering Ripple, the company, I think it's Ripple Research Labs or something like that. They own like 66% of the Ripple currency. That's, I don't know, man, that sketches me out. It doesn't seem like something I can trust. And Ripple's one of the big players right now. And then you've got Litecoin, which, God, man, it's just, I don't trust anyone who starts a coin and then posts things on Twitter to pump the currency. That just seems so dishonest. And man, I don't want to be involved with it. I don't want to contribute my funds to it. It makes me feel gross thinking about it. I'm new to Bitcoin / Ethereum, but I'm looking to start. Can you point me to a good resource? I have a computer science background, if that helps you. A good resource for what? A good resource for learning the technology, or a good resource for trading, or can you be more specific? Let me see here. I gotta run, man. Huge thanks for the explanation. Time's up. I gotta go out. Look forward to blah blah blah. Cool. Thanks, small towner. Thanks for hanging out. See you next time. Don't forget, banks make private blockchains, some on Ether anyway. No need for the public chains. Okay. By the way, big sell-off of Bitcoin right now in Japan at this moment. Oh, really? Let's take a look at it. What is Japan doing, you crazy guys? Bitcoin. Do you know what exchange? Do you know what exchange is selling off right now? Bitflyer. Is Crypto Watch a Bitflyer? Yes, it does. Oh, that's not okay. This is what's going on Bitflyer right now. But that doesn't look like anything too special. I mean, it's a pretty big sell-off, but that's basically what we saw. Yeah, I'm not too wowed by that movement. I mean, that's basically what we saw in the American markets. Do you have a schedule for your streams? I don't have a schedule yet, just because my life doesn't have a schedule yet, and I have a job and I have other things that I tend to, so it's kind of hard to fit it in. But I want to try to give you guys like a heads up with like an hour in advance or something like that. Typically they're going to be in the evenings. Definitely going to have one around 10:30 p.m. Eastern Standard Time is going to be when I'm going to have one. And I want to start having one in the morning, but that's not going to happen until after I can leave my job. Have I taken a crack at the Bitcoin USD graph yet? I haven't. So let's get into that, because that also is showing some Fibonacci retracements. I just remembered because I saw it earlier today. Okay, where's the beginning of this freaking bull run? Because it's been going on for so long, you can't even see it anymore. Okay. Okay, so just in the interest of not having this explanation choppy, I'm going to look through these questions you guys have real quick, and then I'll get into the analysis of it. Let's see here. So thoughts on Bitcoin. Okay, we're going to go over that. What do I think about Golem, Maker, and Melonport? To be honest with you, I don't know. Surprisingly, I'm very ignorant on tokens. Mostly it's just a bandwidth issue. I just don't have the time to keep up with it. And yeah, I think isn't Golem the one that uses unused computing power? Isn't that one? If so, I think that's pretty cool, just from a fundamental level. And then Melonport is a series of smart contracts, right? I don't know much about Maker though. Do I have reservations about doing this full time? I don't have reservations. I just want to be financially responsible so that in the event that I make a bad trade, I have some cushion to sit on. So I'm waiting to close out a couple positions, and once I do, I'm going to be looking to leave my day job and do it full time. Do I think we're in a bubble? Yeah, we're definitely in a bubble. Bitcoin is 100% in a bubble. You don't double Bitcoin in the matter of a couple of months on bad news. It's received nothing but bad news. There's literally no reason for Bitcoin to be rising right now, and it went vertical. Like, it went vertical. Look at this. It went vertical. That's why if you were following my Twitter, I posted the skateboarder on the vert ramp because he was coming up here and he was doing a cool little trick and he was about to eat shit on the vert ramp, and that's what happened. Did you notice the correlation between gold, silver, and the price parallel to Bitcoin and Ethereum? I've heard people talk about the parity between Bitcoin and gold. I don't see the relevance of it, to be honest with you. Yeah, I've seen it, but I don't see the relevance of it. I don't get the obsession to hedge in dozens of tokens. Pick one or two that really excite you and devote your attention. I mean, I totally get, I get the idea of hedging in dozens of tokens because you never know what's going to happen. I mean, if you were in the early stages of the internet and you invested heavily in Yahoo, you would have never seen Google coming, and you would have, potentially lost your ass if you bought in the tech boom. So I totally get, like, you want to diversify. If a couple of things spark your interest, maybe invest a little heavily in those. But I totally get the reason to spread out your interests. I totally get that. If Bitcoin is in a bubble, what does that mean for Ethereum and the rest of cryptos? So, as much as people like to pretend that Ether exists in a vacuum and it's either Bitcoin or Ether, that's just not the case. If Bitcoin goes down, all the other currencies go down. It doesn't necessarily go down at the same rate, but if Bitcoin pops, we're gonna see some big losses on the different markets. I mean, we saw it today. Bitcoin took a pretty sizable dump, and all cryptos followed. Essentially, all relevant cryptos followed because they're all tied together with the ratio. So anywhere that people have a vested interest in something succeeding, you're going to see some pullback on the different markets. All right, so let's get into some of the TA for Bitcoin right now. Okay. So let's go here. Let's make our little line. Here was a peak, and let's draw our Fibonacci extensions off of here. Okay, so our second wave of bull run started about here, and it went up to about here. Man, it saw almost a perfect 50% retracement. This tells me that Bitcoin's not done yet. Bitcoin's still got some juice to squeeze. People didn't get disinterested from that the dump we saw today. So let's get in a little closer. Yeah, it rebounded hard off of this 50. Rebounded hard, touched 23, tested 38, and I was testing 23 again. So let's see where it's going. It started here, and moved down here. Let's see where it's going to retrace. That was normal. So it came down, it dipped. The dip hit a bottom, and it found a retracement at 50. So if you were looking to find a good entry point, this would be it. We've tested the 50% a couple of times. We know for sure we have good support here, because look at all this volume. Jesus. All the volume there. Yeah, if you're looking to get into Bitcoin, I would say a good entry point is here. Or, as it tests this little support line here. What are the questions here? Support for Bitcoin. I'm sure if you monetize Twitch/YouTube a bit, you could have half an income on just... So yeah, I've actually incorporated a donation button on the Twitch stream. So if you found the information useful, or you make some money off of my calls and you feel like you want to donate, there's a little donate button underneath the stream on the bottom left corner. So you probably keep seeing right around here, every time someone subscribes or joins, there's a little Ethereum logo that pops up right there. And the same thing will pop up if a donation happens. I would only feel like donating if it was donating ETH. Yeah, so currently I haven't found a plugin that allows Ether donations. You could donate Bitcoin, and it works through Coinbase. So I don't quite understand why you can't donate Ether. But yeah, just like what everyone's saying, if you specifically want to donate Ether, and that's totally understandable, that's on my Twitter profile. Question. Been in market now a couple weeks. Can we discuss offline storage of Ether? Because I keep reading best practices to keep your... Yeah, so 100%, if you don't own the key to your Ether or crypto in general, you don't own that. You don't really own it. When you put your coins on an exchange, you're giving the exchange control over it, and they're giving you access to it. If you want to have full control over your Ether, the best way to do it is to get something like a Ledger Nano S. They run about $60. It's a hardware wallet, and you can store it there, and it works like a little USB drive. So the whole thing's encrypted, and you can access your wallet on any computer without worrying about it getting corrupted. And you can just plug it into a little the USB drive, and you can treat it like a normal wallet. Are you in? Yes. Am I in open positions right now? Yes, I have 2 open positions right now. One is on the Ether USD market, and one is on the Ether Bitcoin market. So I've got 2 open positions there. I would like to promote the r/Ether, especially the newbies. Good questions and smart answers in there. Yeah, I definitely think you should get as much information as possible. Reddit is sometimes a good source of information, but sometimes it's also just full of shit posts and trolls. So take whatever you see on Reddit with a grain of salt. This sounds like a dumb question, but how big should I start? Obvious answer might be however money I can put aside without risking starvation. Oh, the audio cut out? Some people are saying that. Can you guys still hear me, or is my audio cutting out? Oh, okay. I thought I was sitting and talking to myself for a minute. Okay. What was the question? This sounds like a dumb question, but how big should I start? Obvious answer might be however much money I can put aside without risking starvation. If you're just starting to invest in crypto, whether it be Bitcoin or Ether or anything like that, and you're new to it and you're not going to trade, I would only partition a small part of your paycheck. Don't suffer. Don't let your quality of life get altered with your need to get rich. I know it's really tempting to invest a lot of money, but if it's going to degrade your quality of life, I would say, maybe only partition like 5% of your paycheck every week. And if you're not going to trade, then just invest it. Whatever the market value is at that day, just say, okay, today's, Friday's payday. I'm going to take 5% of my paycheck, and I'm going to just buy at market value and let it sit there. There's nothing wrong with doing that. That's totally fine. I did that at first because I didn't understand trading, and yeah, maybe you'll pick up some trading strategies, and maybe you'll dive into that. But right off the bat, I think it's probably best just to only buy a small portion of your paycheck. Don't overextend. Don't overextend yourself. Only the meme typically is only invest however much you're willing to forget. So just keep that in mind. Audio is fine. Can you say what price you went long again? Yeah, so I'm actually underwater on my long, on my FUSD. I went long at 188, and Kraken is sitting at 177. So I'm a little under, but I have enough collateral that I can just either sell at a loss, or if it decides to test a significant support and it fails, then I'll just close it at a loss. You don't have to be right 100% of the time. You just gotta trade the winners strongly and cut your losses. There's nothing wrong with losing as long as you cut it at the right amount of time. Oh, and my Ether Bitcoin ratio long, I went long at 0.07. So overall, I'm still green. Good to know. Is that what is that little guy? I want to say it's Guy Fieri, but he doesn't have the douchey bleach blonde hair. What is that guy giving the thumbs up? I'm not sure who that is. How long do you usually keep a position open? It depends. It really depends on the market, and depends on how closely it's approaching my price target. So I like to have a price target in mind when I open a position. I don't like to just blindly open a position. That's a big mistake. And you can develop your price target based off of different market trends that we can go over at some point in time, as they become relevant to us. But yeah, we're seeing some nice solid support here. This is looking good. You piece of crap. Let me put a freaking line on there. Oh, God. You're the worst. YouTube panel isn't linking to anything. Yeah, so the YouTube panel is just a placeholder right now. I haven't actually created the YouTube channel, but I'm gonna, once I get this thing chopped up, or I just upload it long form, I'm gonna put this recording on my YouTube channel. Can you get in how to set up the take profit? So the question is, can you go a bit into how you set up the take profit targets? The short answer is there is no right answer, because it depends on what you're looking to do and over what time scale you're making your market moves, and if you have leverage and things like that. But one common strategy is, say for example, we're looking at this market right here, right? We know for sure we've got some support here. Oh, God, I can't draw a line. We've got some support here, right? And we know this is going to be a moment of resistance, a price of resistance, because this is just a new high. This just tends to be a resistance points. And we know, man, I really wish I could draw a line. Damn it. Oh, here we go. Let's draw it here. So if I were looking to get into a position right now, I would say I'm going to look to get along this support line, which I think is where we're at right now, right? Yeah, in and around there. Okay, I would look to get in around this support line, which exists at the high here, at this peak here. And we're showing some strong support here. So I would say you typically want to have a 5-to-1 profit loss ratio. No, alt isn't doing anything. So if I were to look to get into a position right here, I think this is a great, this would be a great play. It's shown historic, this is an historic milestone here. This was the top of our bull run. We're showing support at that bull run. So if you're looking to get into a position, I would say this is a reasonable position to open here. Your price target would be something like This is 217, so maybe something like 215. And you can make a pretty good chunk of change off of that, because that's a $30 spread, and it's relatively low risk because we're showing some really solid support here. Things that you would watch out for are tests of this. So if you open your position and it's showing like it's going to continue downward, you want to set a price target that's going to close out your position at little loss as possible. And so you would look for different resistance levels. So here's one resistance level right here. This was an historic resistance level. This is a resistance level. This is going to be the, okay, it's probably time to close my position level, because you've far exceeded the benefits here. You're well below anything that's meaningful, and it's just going to drain you. Gotta start my day here. Looking forward to future streams. Cool. Thanks for stopping by. Perhaps you can walk us through how you did your current two positions. Yeah, could probably do that. Well, it's gonna be a lot harder because I can't draw on here. Let me see. How could I do this? Oh, I can just look at my past chart. So let me dig through my past charts here. All right. So this is how I placed my most recent position that made me a really good chunk of change. Here's the chart. So on May 18th, we had yet to break out of our pennant. Okay, we spent a couple weeks forming this this formation. We're looking at 12-hour candles here. Okay, there are different indicators outlined here. And I know it looks kind of like a bit of a cluster, but you know, that's charting for you. Hold on one second. So when I made this prediction, I set my entry point right above this bull pennant. This is a formation that's really common in a bull market. It's really common in crypto especially, and that's called a bull pennant. And what a bull pennant is, it's a candlestick formation that has various indicators that support a very predictable price movement. So in this case, the bull pennant is going to be outlined by lower highs and higher lows. Okay, so it's converging along this bull pennant line. This is called the bull pennant, and and this is called the pole. This is the pennant, this is the pole. Both are relevant to where your price target is going to go. So if you were only looking at this bottom part, right? Let me see. If you're only looking at this, for example, and you had no other indicators, you were just looking at the chart, you would be inclined to say, oh, well, this is the meme on Reddit right now, is that technical analysis is just it's like reading tea leaves, and that you're wrong more often than you're right, and all this other just nonsense. Well, sometimes you can say that, but it's all about probability of success. And the more things you have stacked in your corner, the higher the probability of success with the trade, and the more predictable the trade is going to be, right? So different things that are going to increase your probability of success here are going to be, first is going to be the candlestick pattern. Next is going to be the volume trend. Next is going to be your MACD, or convergence divergence, and your RSI. And I'll go over what those are here in a second. Within a bull pennant, you want it to be decreasing in volume, because that indicates a consolidation pattern. And what a consolidation pattern is, basically the swings between the bulls and the bears, the buyers and the sellers, are getting less and less, and they're finding middle ground. They're basically being like, okay, you know, it starts off one guy saying, you know, I want it way up here, and some guy says, no, I want it way down here. And as time goes by, they're kind of just like, okay, fine, fair, we'll meet in the middle, and that's the consolidation pattern, right? You're going up, you're going down. The guy's like, no, I think it's worth more, and they're like, no, I think it's worth less. They say, no, I think it's worth more, and eventually they're just like, okay, well, it finds this nice little center line here, okay, and that's also shown in the volume. The volume is continuing to decrease down the entire length of the pattern. Not only that, but there's a divergence on our momentum indicator, the MACD, the moving average convergent divergence is a measure of momentum, and it's showing us that the trend is about to reverse because a new low does not correspond with the low. So not only that, but we see here that the RSI is starting to find this middle ground where it's no longer overbought and it's not oversold. It's nice in the middle here. So that indicates people are finding comfort in this zone. So you're probably wondering, you know, like, what is how in the hell do you calculate a price? And it consistently is calculated by this. You start at the beginning of the bull run that brought you into the bull pennant, and you say, this is the beginning of my bull run. It starts at, let me pull this up here. What is this? This is GDAX 12-hour candles. 12-hour candles, boom. Okay. All right, you'll just have to trust me. Okay, there's a line that goes from here and it goes down. Okay, and it goes here and it goes down. Okay, that's this. So the beginning of our bull run, oh wait, I'm looking at the wrong damn thing. At the beginning of our bull run, it started out at 50. Okay, this is the base of our pull, and it rises up here, and this is where we start seeing the pullback. This is the pennant right here. Boom. Okay, so the pull length is going to be the beginning. I'm sorry, the top of the run, subtracted from the bottom of the run. Okay, so this is clear. How do I clear? Clear. What's this? No, just clear. Oh, I just type. Okay, so it's going to be about $100 minus 50. So our pole length is going to be 50, or in this case, yeah, pole length is 50. Pole length is 50. So to calculate a price target, what you do is you say the breakout is going to occur. Oh, sorry, I thought I had the chart. So the breakout is going to occur somewhere around here. So let's say it's going to be 92. I think that's what it actually broke out as, 92. Okay, so 92, or let's just say 90 for the sake of simplicity. 90 plus 50 equals 140. That's where price target comes from. Pole length is 50. Breakout part is 90. 90 plus 50 is 140. Well, let's look and see what happened. Okay, broke out at 90. I moved up, and it let's get a little bit of detail here. It broke out here. It moved up to we had a bit of resistance here, and the bull market just took off. It actually way overshot our target. Way overshot our target. As you can see here, there was a bit of resistance here, but the fundamentals were too strong, and it just way overshot it. But that's where our price target was, and you can see it pop up on the graph here. Do I think ETH Bitcoin is a pennant at the moment from May 21st breakup? Yeah, if I could draw on this, that'd be awesome. I don't think ETH Bitcoin is. Oh, let's put this in paint. If I can bring it to paint. This is what I'm keeping an eye on right now. I'm keeping an eye on this trend right here. So this isn't a pennant. This is an ascending triangle. Oh, there's monitor cut off. Can you guys see it? No, you guys can see it. What do you mean? I'm looking at the stream. So it's not a pennant, but it's definitely an ascending triangle, and it's actually testing the bottom right now. So This is gonna determine where the trend goes. And you know what? Sometimes it's okay to revise your chart. This might end up being something like this by the end of this. It doesn't change the intent of the pattern. It just kind of changes shape a little bit, and that's totally fine to do because the price target's gonna be the same. So similar to the bull pennant, there's a predictable price target that you can get from a chart. And the way you calculate price target is it's going to be, rather than the pole length, it's going to be this length here. It's going to be this length here, from here to here. Jesus. Is one more reliable than the other? Bull pennants are pretty reliable. Historically, I've traded them and have had success. That's really consistent. I don't know if one's more reliable, but so here's a little pro tip about ascending triangles though, because I'm a fucking pro. No, I'm just kidding. Ascending triangles typically break. So if this is your triangle here, let's draw this out again. So if this ends up being your triangle here, and this is your triangle here, this length right here, length of the triangle, let's call that L, length L. There's L. Times L. That is typically when your triangles break out. They break out at 2/3 the length over here. So we can expect, if this is an ascending triangle, it's still kind of early. It's still kind of early, so we can expect a breakout if this continues, and we'll know it's continuing if it decides to come up and tests here again. You know, maybe it'll be here or somewhere along here. It's going to test this again, and maybe it pings the bottom again, but it's going to break out somewhere around here, somewhere around there, which puts us at a date of what's this, May 28th and a half, May 29th maybe. What chart is this? This is, yeah, Kraken Bitcoin. If you had to amend your chart, does it make the trend weaker / less reliable? No, it doesn't make it less reliable. It doesn't make it weaker. No, it just changes shape. It doesn't compromise the integrity of the pattern. It just changes shape. It might change your price target a bit. It could change your breakout point a bit, but the overall sentiment of that pattern, no, it doesn't change. All right. So, do you guys have any just general comments? So I feel like I'm talking your ear off, and I'm not. I feel like the quality of my stream is decreasing a bit. Is there anything that you guys are just wondering about, or should we call it a day? The difference between a pennant and a triangle is literally just the shape. So let's see here. I'll show you. So this is a pennant. The pennant is characterized by decreasing highs and increasing lows. So it goes like, you know, it converges along this line. And a triangle looks like, oh, that's Bitcoin today. A triangle looks like, what the hell is it? It looks like this. So it's going to have a flat top and a rising support line, trend line. So flat top, that's your triangle. See the ascending triangle here? Any good resources for learning about TA? Yeah, literally, I know this is probably not going to be the answer you want to hear, but everything that involves Forex can in one way or another be used to apply to the crypto space, and that's where I got a lot of my trade strategy from, is from just Forex, like literally going onto YouTube and typing things as vague as Forex strategy, or Forex bull pennant strategy, Forex target strategy, like things like that. Like the anytime I have a question, there's a lot of resources on YouTube, and that's the best. Baby Pips is good. I've never personally ever used Baby Pips, but I've heard a lot of good things about it. Noob question. I did not get, how do you calculate or find the triangle leg? Which leg? The vertical or the horizontal? The horizontal is just going to be, it's a resistance line. So we saw two tests of the we saw two tests here. One, let's get one, green. So one test, two tests. Now we can start developing a trend. We see a common occurrence here. It tested once, it didn't like it. It tested again, it didn't like it. So you know this is a point of resistance here. How many tests to confirm resistance? One test is enough. If the market hits a price and it rejects that price, that is now a point of resistance. If it tests it again and it rejects it again, that becomes stronger resistance. If it tests it a third time, that becomes even stronger. It compounds. The more times it rejects it, the stronger that can be viewed in the market. Have you seen any aspects of traditional trading analysis that don't apply? The only thing you have to be careful about that I've come across is that on smaller timescales, patterns don't always apply. On stocks, on Forex, because there's so much volume of trade and there's very high liquidity, you can zoom into things like 3-minute patterns and you can still see patterns like breakout patterns on the smaller time scales. But with crypto, what I've come across is that once you get below like 15 minutes, 15 minutes is really like the limit, but if you have like a 30-minute candle, that's really the lowest you want to go, because anything lower than that isn't accurately represented with enough liquidity to get resolution on your pattern. It kind of just jumps around anything lower than that. All right, I think that's good for today. If anything exciting happens on in the market, maybe I'll hop on and we'll talk about it later. But until then, ooh, this is good. Bitcoin took a little dumpy poo over here on Kraken. It's good for the ratio. Yeah, feel free to reach out to me on Twitter. I'm usually pretty good about responding. If you have any questions or advice or even just general commentary or things you'd like to get covered, then yeah, I'll try to add it to the stream. And if you like the stream and you want to support me, there are plenty of avenues to donate, or even just say, hey, keep up the good work, or even a retweet on Twitter works just the same works just the same for me. And then for those curious about the donation addresses, there's a donation tab below the stream, and then if you want to send Ether, it's on my Twitter account. All right, cool guys, have a good night.